If you find yourself asking how low can it go, the answer is almost always lower.
We are in unprecedented times where both your money and your assets are losing value at a rapid pace. So the question becomes, how do you invest during this time? Well, we're going to go through 4 main asset classes and whether you should invest in them or not, and how you should invest in them. First up, we got real estate. Now with real estate, I would not invest. The reason is, right now, as a ton of supply is coming on the market, demand is drying up. Mortgage rates are up almost 2 times what they were just a year ago. And as the Federal Reserve continues to suck up excess money from our economy, mortgage rates are going to continue to get more expensive. Next up, we got bonds. Now bonds, they're safe, they're reliable, but they never give a good return. So if you're saving for retirement, it would be a good idea to put maybe 40% of your portfolio into bonds. But if you're younger, if you're trying to turn your money into more money, it would be a bad idea to put your money into bonds. I mean, the real yield on a 30-year treasury right now is minus 5%. Inflation's just going to eat through all the money that you earn from bonds. Now later this year, bonds are going to start to give a better return as the Federal Reserve continues to take money out of the system and inflation starts to go down. So if you're saving for retirement, it would be a good idea to buy a lot of bonds later this year. But if you're younger, I would not recommend buying bonds. Next up, we have a newer, controversial investment, cryptocurrency. Now, cryptocurrency is risky. It's the riskiest asset I'm going to mention today. So if you don't understand the technologies behind cryptocurrency, do not invest in it. Now, with that out of the way, how I value the cryptocurrency is based on how much financial transactions and economic output it will facilitate in the future. So for that reason, I'm very bullish on Ethereum, but not so much on Bitcoin, because Ethereum has a lot more real-world applications, especially with its smart contract technology. Now, I personally don't even know if cryptocurrency will be the future, but there's a lot of people who are way smarter than me working to make it happen. So if you're younger, I would recommend putting maybe 5%, maximum 10% of your portfolio into some sort of projects that you believe in, that you believe have some real world applications and will grow in the future. Last up, we got stocks. Now with stocks, we've recently had a massive crash, so there's a lot of really good deals out there. If you look at this chart right now, you can see that small and mid-cap companies are trading at levels that they were during the 2008 crash. So if you know how to choose good companies, I would say this year's the best time to just increase ownership of those companies. Throughout the year, if it goes lower, buy more. So how I choose good companies is I look at 3 different things. Obviously, there's the financials, which everybody looks at already, but there's the leadership team too, and the product. The leadership team, you gotta have some people who have a set direction and vision that the company is gonna go for. For the product, you gotta have a product that people really want. Most of the time, the financials follow the product. So if the product is good, the financials get better. If the product's bad, the financials get worse, and so does the stock. So ideally, if you want to invest in a company, you gotta have those 3 things be good. So during this crash, I found 3 really good deals: AMD, Tattooed Chef, and Corsair Gaming, where all 3 of them, I really like their financials, I really like their product, and I really like their leadership team. So during this year's a year to increase your ownership of companies. So just buy and hold really good companies, and if the stocks go lower, which they probably will honestly, just keep on buying. Thanks for watching.